the autonomous driving industry and the technology is developing along at a fairly nice clip. And regularly we get stories about developments in the technology and in the business model and so on. And another one came across my desk today. GM, with its Cruise subsidiary, and Microsoft have signed a big agreement. And we're going to talk to Sam Abuelsamid from Guidehouse Insights about what that means for the industry and for this company. So welcome to the interview, Sam.
Always glad to talk to you, Markham. How are you doing today?
Well, Sam, thank you. Look, let's start with a brief overview of what this agreement entails.
Yeah, so there's two major aspects to this. First of all, there's an additional $2 billion investment into Cruise that includes Microsoft for the first time, as well as their other existing investors, GM, Honda, T. Rowe Price, SoftBank. And that's going to be crucial for Cruise to be able to get through this period as AV technology matures and starts to get commercialized. They're going to need capital to keep them going until it can become a sustainable revenue stream. And then the other the other part of this is the cloud computing deal with Microsoft's Azure development or Azure team, and Azure is going to be the cloud platform for Cruise as well as for General Motors.
Now let's talk about something that doesn't get a lot of attention, and that is, on the one hand, you have the ability to make autonomous driving work, and that's a big challenge and lots of progress. But there's also a business model issue here, and this agreement is part of, it seems, Cruise's strategy to build out the technical infrastructure to support a revenue model, a business model as it develops. Maybe you could describe how that works.
Yeah, so if you're going to build a mobility as a service or transportation as a service business, the automated driving component is just one piece of the larger puzzle. Obviously you have to get a vehicle that can safely navigate through its environment. But then, those vehicles have to be connected, and they're going to be feeding a lot of data out of the vehicles to the cloud, and also ingesting data from the cloud with updated map information. You've got to have a dispatch platform to tell the vehicles where to go, when they need to be there, what to deliver, or who to pick up, and so on. All of these things are going to be running in the cloud. As well as things like map information, traffic information, and feeding that to the vehicles, and then also collecting data about what's going on in the world to help inform other vehicles in the fleet. And so that requires a lot of infrastructure, especially when you start to expand to multiple markets. So far, Cruise has only been operating in San Francisco. And it's one thing to build yourself a platform to operate in a fairly small area like that, but if you're going to go national or international, you need a lot of back-end infrastructure, and that's something that Microsoft Azure can provide for Cruise.
Now, when I asked you about this prior to starting the interview, I asked you if this was a step forward in not just for Cruise, but for the autonomous driving industry, the mobility as a service industry. And you said it was a baby step. Maybe you could explain that.
Yeah, there's a lot of pieces to this puzzle. The cloud platform is one part of it, the developing the core technology of driving, but you've also got things like managing the fleet, marketing, the service of the vehicles, charging the vehicles. Most of these are going to be electric in some form or another. And so all of these components have to come together in order to have a viable and cost-effective service. So, in addition to deals with companies like Microsoft Azure, you're going to see Cruise and other companies, also set up other relationships. I was talking earlier today with Carl and Yema from Motional. They recently announced a deal with Cox Cox Automotive in one of their business units that's going to handle the fleet operations, cleaning and charging and fueling of the vehicles, maintenance of vehicles. You've also got potentially deals with companies, existing ride-hailing companies like Lyft or Uber, or mobility service companies like Via, or the businesses that want to use these vehicles for deliveries. So all of those components have to come together in order to build a real business.
Uh, Speaking of a real business, and I've mentioned this before, but Tony Seba in 2017 said that mobility as a service and robo-taxis were going to basically replace private ownership of vehicles by 2030, and I don't think that prediction is going to come true. But are we making significant progress to mobility as a service, and when might that become a reality? I know I'm asking you to gaze into your crystal ball a little bit, but if you don't mind.
Yeah, I mean, mobility as a service is something that we've actually been evolving pretty aggressively for the last decade. The one area where we have made a lot of progress, or two areas really, ride hailing and deliveries, are both mobility services where we're relying on others. Currently they're human-driven vehicles. Going forward, they're eventually going to be replaced by automated vehicles. The challenge with with the services we have today and going forward is that the cost of providing those services is generally more than people are actually willing to pay for those services, and so these have all been money-losing propositions. With the advancement of technology, the hope is that we can both reduce the cost of these services, make them available and accessible to more people, but also at the same time also make them more reliable than what we might get, and safer. So we will, I believe, eventually get there. It's going to take a fairly long time, and I don't think it's going to, we're certainly not going to be at 95% of passenger miles traveled be by, robo-taxis as Tony Seba projected by 2030. But eventually, at some point in the future, we'll get there.
Is it fair to say, because I'm not going to let you off the hook on this until we get a date, would it be fair to say that somewhere in the 2030s, that mobility as a service will be ready to make a significant contribution to transportation?
I would say certainly, yeah. By the early to mid 2030s, it will be a much more significant portion of the transportation ecosystem than it is today. I mean, prior to the pandemic, ride hailing was somewhere around 2 to 3% of rides in the U.S. And it will certainly be probably well into the double digits, maybe 20-30% by the early 2030s. And then accelerating beyond that. So as we get into the 40s and beyond, it will probably become the majority of transportation.
Sam, thank you very much for this.
Always a pleasure to talk to you.